Hey everyone, it's time to take a look at a few American stocks. Let's see what's happening today and highlight the key points that I hope will help you make well-informed trading decisions. Let's get started. Today we'll start with Palantir and its monthly chart. The trends and levels are still relevant. At the moment, the price is breaking through the upward trend and at the same time falling below a previously established level. In my opinion, this is a very clever manipulation aimed at getting most traders to sell. When the price drops below the level, most people sell. When the uptrend breaks, most people sell. And the big players who orchestrated this manipulation are buying from all these traders in order to profit from it later. They'll only be able to make money if they push the price higher, which is exactly what we should expect in the future. To confirm this scenario, I'll say that there were very few sales during this move. These aren't the kind of volumes that come into play during a real breakout. Now let's take a look at the daily chart. In the previous review, I expected the price to drop below the $125 level to collect liquidity and then continue to rise. So far, everything's going according to plan. Next, I expect the price to break out of the downtrend and continue to rise. I'm sticking to my previous chart expectations. So for those who are holding shares in their portfolio, in my opinion, this is the perfect setup for continued growth. Everything's pointed to that right now. There's no reason to get rid of the asset. If things play out the way I see it, the asset is in for a strong rally, and the global target can be set at $300 per share. It's unclear how long it'll take to reach this target, but for now, there's no doubt that the asset is headed in that direction. Next up are Oracle shares and their monthly chart. The price continues to move in an uptrend and has now reached its lower boundary. So far, the selling volume isn't enough for the price to move further down, break through the trend channel, and drop below the lower level. So the only thing I can assume is that the price will move either within the current uptrend or within a sideways range that could form in the future. The daily chart also doesn't make the next moves any clearer for now. Even though the recent drop came with a surge in selling volume, it's still not enough to push the price below the current low. Based on everything mentioned above, let's sum up. We need to wait for a strong move in either direction to determine the intentions of the market participants. For now, everything points to the price continuing to move within a sideways range. Next up are Intel shares. The monthly chart still shows the same picture. After a strong rally, the price is stalled, and I still expect a correction down to the highlighted lower level around $75 per share, after which the asset is more likely to continue rising. Now, let's look at the daily chart and try to identify the current efforts of the market participants. Here, the price continues to move within a sideways range. Yes, it did break out of the range for a moment, but that move wasn't supported by significant buying volume, so it looks more like manipulation than a genuine attempt to continue the trend. And after such manipulation, I expect the asset's price to decline further, which also supports my theory about the start of a deeper correction. I'm sticking to my previous chart-based expectations, so for those holding shares in their portfolio, I still don't see anything positive, and I continue to believe that the asset's price will fall. It only makes sense to buy more shares after a correction to the $75 price level. Next up are Microsoft shares. On the monthly chart, the trends and levels remain relevant. The price continues to move in an upward trend. In the previous review, I highlighted the $350 level as key for further analysis. The price has reached that level, but so far it hasn't broken through. So we need to keep watching how the players act. There's no need to rush to conclusions because the month has just started and a breakout could still happen. Let's take a look at the daily chart. After the price reached the marked level of $350, significant buying volumes appeared, which prevented the price from moving further and brought it back within the bounds of the overall upward movement. I think this movement will continue at least up to $400 per share, after which we might see a reversal. Therefore, for those who hold shares in their portfolio, the price of $350 per share remains a key level for making decisions. If the price drops below this level and stays there, it will be a strong sell signal for this asset. For now, I consider buying the asset at current levels to be risky. Even though the price continues to move in an upward trend, right now there is a struggle between both sides, and only time will tell how it ends. Only if the price rises above $450 per share will it show that buyers intend to push the price up to $550. So that's roughly how I see things playing out. But if you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope this was really helpful. And don't forget, we make assumptions, but the market decides.